Well, thank you so much for joining us here on the Comstock channel. I'm Marlon Bowling with you. Just want to remind you to like these videos down below, and also, if you would, you can click on that bell icon so that you get a reminder whenever we release a new edition of these Comstock channel videos. We love talking with you about everything ag related, whether it's markets or politics or ag business related, what have you. And also do me a favor if you would, and feel free to share this video with your friends so we can get the word out about the new revisions that we're making at the Comstock channel. We're getting an ever expanding audience here, and we love having you on board. Want to share the info with your friends too. Well, I'm pleased to be welcome aboard Chad Hart. He is an extension economist with Iowa State University in Ames, Iowa. And Chad, it's an honor to have you on here to talk about the farm economy right now. Iowa State actually put out a report here just in the last week or so, and I think one of your colleagues in that department may have been the primary author on that report. But it's all from your section of the university there, and it has to do with ag profitability these days on the farm, and the correlations that it may have with land values. And that's a key topic right now. If you would, can you kind of touch on the ag profitability as it is now compared to what it was maybe a year ago at this time?
Sure. I think as we look at the ag economy, we've been having a really good run of profitability, especially coming out of COVID. We saw some very strong prices, especially on the crop side through 2021, 2022. And as we entered 2023, we were looking at really good, strong profits across the industry. Now, throughout 2023, prices have pulled back a bit. Now we're in more of what I call break-even territory, or sort of normal. We've seen our production cost rise some, although they sort of were chasing those prices as they went up those past couple of years. And now that prices have fallen, we're also seeing our production costs lower a bit. But we are finding it a more challenging agricultural economy as we're entering 2024, especially compared to a year or 2 years ago.
All right, so if that's the case, what kind of difference are we talking? How much money did the average farmer make a year ago versus where they stand right now? You say it's almost at a break-even point.
Mm-hmm.
It's been a few years since we've had to really worry about that part.
It really has. If you think back to, say, the 2022 corn and soybean crops, we estimated production costs at the beginning of 2022 at $4 a bushel for corn and $10 a bushel for soybeans. Well, based on USDA's numbers, that 2022 crop averaged $6 a bushel for corn and nearly $14 for soybeans. So there were fairly significant profits out of that 2022 crop. Here with the 2023 crop that we just brought in this fall, we've seen those costs come in, around $5 for corn on a per bushel basis and $12 for beans. Well, if we look at where prices sit right now, USDA's got us estimated at $4.80 for corn. So we're actually 20 cents below our production cost estimate as we look at the corn side. And when we look at soybeans, USDA estimates the price at $12.75, which is still 75 cents above our production cost estimate, but it's a much tighter margin than what we saw out of the 2022 crop.
Well, now translate that, if you will, into what that means for land values and maybe cash rent values now. Does this give the landlord the upper hand now? Does it give the renter the upper hand in negotiating?
I would say it's tilting from the landlord sort of back towards the tenant. When you think about those strong profits we had out of 2022, that gave the landlord the advantage when it came to negotiating that cash rent. They knew the farm economy was good. They knew that those crop prices were good. And so they could push for significant increases in that cash rent. Now that we've seen prices back off a bit here within, the last year, like I say, that's tilting the advantage back towards the tenant, because those profits aren't necessarily there. And in fact, I would say that the tenant has a little more negotiating power because the landlord is trying to gauge how far they can push without knowing that they're in a positive profit position when they look at the crop coming off of their land.
Chad, I know there's a lot of interest in what the Fed does with interest rates. And of course, they have risen them a lot over the past year, but now they've leveled off for a little bit. And there's a debate whether they will lower interest rates. Some say they might even have to raise them in 2024. But every little increment of interest change, when you're talking about a large parcel of ground, I mean, that makes an astronomical difference, doesn't it?
It definitely does. Because, yeah, I mean, as you say, when you take that loan out or that mortgage out on that piece of ground, yep, that interest rate that's being charged does add up. But what we've seen within ag, at least over the past year or so, was that you still had strong enough incomes in ag that was pushing land values higher. At the same time, those interest rate increases were trying to push land values down. And so what that did was that sort of leveled off the playing field, at least here in Iowa. And so when we look year over year, our land values have stayed fairly constant compared to last year. But if you look back over the past couple of years, we had seen some fairly dramatic increases in land values over that time. So it's more of a, let's call it a plateauing of the land value as opposed to a decline or increase right now.
Didn't you still see some new record values, though, last year?
Oh, we still did. And, it depends on, I go back to the old deal of, the thing about any sort of real estate is it's location, location, location. There are still some definite hot spots around the Midwest where if you're looking to buy some land and you've got several competing farmer interests in the room, we can still set some record values. But overall, what we're seeing is, let's call it a steadying of our land market here, at least in Iowa.
What do you think this is going to do to the competitiveness among area farmers when it comes to maybe a piece of ground that's coming up either for sale or for cash rent? Are the larger farmers going to have even more of an upper hand now, or is it going to maybe level the playing field a little bit more now?
My own sense is that it sort of levels the argument a little bit here. And when you're looking here, as we look over time within our land markets, we tend to see the same buyers in over and over again. We see about 80% of our land here in Iowa turn over to existing farmers. We see about another 15% that usually ends up in some sort of investor argument. So you can think of that's usually someone who maybe grew up in the local area but has gone off and become a lawyer or a doctor, and they want to reinvest in farmland back at home. They do that. And then we see about 5% that typically ends up with new and beginning farmers. And that's been a fairly stable, if you will, mix of buyers in the market over the past 20 years.
Well, that's interesting stuff. Now, are the bankers, are the lenders for this land getting, let's say, a little more choosy on how they lend money to buy a large parcel like that? Are the guidelines a little more stringent than what they were a year ago?
Yeah, I would say that's something that has continued to be the case, basically going all the way back to the 1980s. If you think about the 1980s farm crisis and what we saw with the land spike and dramatic drop back in the 1980s, a lot of that was built on this idea that we did have fairly loose lending laws back in the time. Ever since then, we've been strengthening those requirements, and this latest round that you saw of strengthening really occurred right after the Great Recession in 2008. So your ag lenders are requiring more collateral behind them. They are putting up less land on a per acre basis than they did in the past because they are monitoring their risk as well within this market, and especially with each acre of land being worth so much more than it's been in the past. That value does add up. And yes, those banks want to get repaid for that loan on that piece of land. So they're going to make sure that they control that risk.
Has that landscape changed so that it's even harder for younger farmers to participate now?
It's changed, but I would argue the change has not been because of regulatory issues. It's more about just the cost of participating within the land market. You have to think about the value of an acre today versus what it was, say, 40 years ago. You're looking at something that has, increased dramatically. I think the early 1980s, the average price for an acre of Iowa land was somewhere in the $800 to $900 range. Now we're talking about an average acre of land here over $9,000. So there's been this dramatic increase over the past 40 years. And let's face it, that makes it much harder for someone who is new within the industry, especially if they don't have that financial background that bolster their case when they go talk to the lender, it does make it more difficult for them to get into the land market.
Do you foresee a scenario where land values would go down by next year?
Yes, definitely can. And we have seen that in the past as well. If we do see crop prices continue to work their way down here through 2024, and we do see some losses building up, especially on the crop side, that does tend to lead to drops in land values over time. You can think of a scenario that we went through just, 10 years ago, where we saw, if you will, a similar run within not only crop pricing, but within the land market. From 2010 to 2012, we saw some really strong crop prices, really good profitability, and that translated into really strong land values. Then as prices fell after the drought was over in 2012, and you think about years, especially 2014, 2015, 2016, where we did see some negative returns, especially in crop agriculture, that led to lower land values at that time. So it can happen, and it really depends upon what we see in terms of future profitability for agriculture.
Absolutely. And I suppose that comes into play considering where we are historically on the land values. Let's say, for example, someone inherits some land, or maybe they're retiring and they're thinking of what to do with that land. It might be something to look at where maybe the market has temporarily peaked short term. I mean, it's possible, right?
It is possible. And that's the deal. We do see land continuing to turn over, although not as quickly as it used to either, especially when you think about um, just the pace at which sales go on right now. In a typical year historically here in Iowa, roughly 2 to 2.5% of all the farmland would change ownership hands within a year. That pace has slowed down to about 1.5% per year. So we have seen fewer sales, but I would argue fewer sales, but they tend to be of larger amounts of acreage. And so it's something that, if you will, that slowdown in the pace of sales also helps keep the price of land fairly elevated.
Well, Chad, I sure enjoyed talking with you. I wish we had more time, and tell you what, we'll follow up again here sometime soon and see how things are doing as we get closer to planting season. Maybe we'll see if the weather changes things too. Chad Hart is with Iowa State University. He is in Ames, Iowa. For producer Brianne Hendrickson, I'm Marlon Bowling. See you next time on the Comstock Channel.
You can find us on Facebook, YouTube, and TikTok.